The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, no doubt plenty of risk off in the market trade on Thursday after the Trump administration announced their reciprocal tariffs and the baseline 10% tariffs and more on Wednesday. Hard drops in stocks, energies, metals, livestock trade, soybean oil, yet corn and wheat didn't do too bad compared to everything else. Let's get perspective and talk about things. Joining us now, Brian Doherty, Senior Market Advisor with Total Farm Marketing. And Brian, good to talk with you again. And no shortage of items for us to discuss today, I would say.
No, not at all.
1,000-foot view this for us. Your reaction to Thursday's reaction in the markets to all the tariff news and more.
Right. So initially, when Trump started to talk yesterday, the markets we're kind of passive. But then when he talked about across the board tariffs, and it was more than I think a lot of the market participants were looking for, things went pretty negative pretty quick. And for many markets, they stayed negative. When I say many, as we record this, the Dow Jones is down about 1,400 points. That's a pretty big move in a day. And yet, you have to kind of step back a little bit and understand that there's a little bit of a shakeout in the situation. The markets move on perception. They move on irrational things. They move on fears. Jesse, they move on a lot of things. So when we look at the big picture and we look at what's happening, not really a shocker. But let's take a look at, you'd mentioned the corn and the wheat markets. So corn down a penny or so on the day, penny and a half in that range for the new crop, but old crop up a quarter of a cent. So, and that's after coming back from, finish at 465 and a half, low 455 and a quarter. So double digit loss, right? So somebody recognizes the value. And then two, when you take into account, I just ran some quick numbers. The dollar's down about 7.3% from its recent high. Corn is off about, in rough numbers, about 12%. Anyway, take a look at both numbers are about 19% down in value compared to where it peaked. And incorporating the dollar, for a lot of countries, this is factored in. Mexico said they wouldn't reciprocate, right? So I think the corn market kind of twice got some news this week that could have been really viewed as negative between a higher acreage number and now tariffs. And here it is. It's holding it very well. So what's behind that? I think another good week of export sales, 46 million bushels, and that puts year to date at 2.135 billion. That's an encouraging number. 2.450 is what so 300 million bushels to go to meet the USDA projections, and a lot of time to do that. So we think they'll hit that projection. So exports remain active. Beans were a good export number today. They were down 18. They've had a lot of volatility, mostly related to soybean oil. And with tariff talk, there's concern there, or had been concerned about canola oil. I really don't know why the energy market got hammered so hard today, other than the stock market got hammered and there's concern of perhaps less demand, but I don't know if that's going to be long-lived either. Commodities are a different beast. They go on sale when they sell off, and they become cheaper. Tariff or no tariff, people still need them.
Mm-hmm. No, that's an excellent point. And I'll ask you this, Brian. Now that we have the certainty on what the tariffs are and the acreage numbers and grain stocks, you mentioned those from Monday. Now that we have all these big events, quote unquote, into the market, we're digesting them, I have to feel like the focus is going to shift back to the weather situation here for the next 60 to 90 days. Brian, talk about that a little bit.
Well, let's talk about that, because there may be this argument that corn is finding support from weather. There's some really, really saturated and heavy rains in the forecast for parts of the southern Midwest and southeastern Midwest and Kentucky and Tennessee and southern Indiana. Just to give you a sort of a visual story, talked to a farmer yesterday, big customer of ours. He's in southeast southern Indiana, and he said, well, if I walk across my yard, I'll squish water out of it. And he goes, and we've got 10 inches of rain forecasted over the next couple of days, 2 or 3 days. So he said, and then on top of that, just to kind of put it in perspective, last year we were planting today. So on this same date. So the point of it is that less than ideal start for many who want to get rolling, whether it's planting beans or corn. Uh, and so you got that in the works, and then when you get north and you get west, certainly some much needed moisture and some rain, but a lot more needed. And it looks like we turn drier again. 6 to 10 day forecast, 3 days in a row had the western and almost the central Midwest, but all of the western Midwest as below normal in precipitation. So for many, they're grateful, thankful, but there's a lot more needed, and looks like it's going to be a little bit on the cooler and drier side then for the next couple of weeks. And so field work will move along, but again, not big replenishment of soil out west.
I wonder in the soy complex, you mentioned some of the volatility there with soybean oil, canola oil, and more. And then, of course, the tariffs. I immediately think of that big tariff number on China and what that could maybe do or has done on Thursday's trade into this soy complex and its psyche overall, with a complex that was already kind of beaten down. Brian, talk about that a little bit.
Yeah, so let's just talk about let's start with the beans and then the biofuels and things like that, where you're seeing a lot of volatility into the oil complex. So really important to kind of keep that in context, that that's an evolving and growing market space. But beans themselves, when you look at the chart, 1026 is where July beans closed today. Not a very impressive day, down 19 cents, gap lower. But this is where they were 2 days ago, and this is where they were 2 weeks ago. So the bean complex is really in a good consolidation pattern, and that is despite Brazil on the tail end of harvest finishing things up. So how do tariffs affect beans? I would suspect that, the perceptive view is that China just is, retaliatory, that they won't be buying U.S. beans, and maybe Trump can do his magic again like he did before, and figure out how to get them to come in and buy and do things. When I say magic, there's a long process there, his first go around, but they did buy a lot of beans after that. The bigger problem with the bean complex is just this steadily uprising, increasing ramp up of Brazilian soybeans, and then China's dependency on those Brazilian soybeans. And I'm not backing China, but you can't blame China. They need sources of soybeans. I don't know. The way the market traded today, it kind of got the worst out of its system right away, and then never really got any worse than that. So if you didn't know any better, you wouldn't be too overly concerned. The expectation to crush for oil. Now, oil was beat up really hard today, but that's put pressure on soybean meal, which broke into new contract lows here the last couple of sessions, and today managed to actually post a small turnaround. Uh, but the bigger overriding problem, I'm not sure if it's tariff related, but the bigger overriding problem is just availability of beans in the world marketplace. So price rallies are hard to come by unless we get some kind of weather event to push some markets higher or beans higher. But right now, you're kind of past the weather market for South American beans. There's just not a lot out there that can affect it much anymore.
I'm going to lump together cattle, hogs, and dairy just for your perspective on that side of the ledger here. It felt like many of these markets probably tied into the stock market reaction and more to tariffs on Thursday. What was your view of our protein sector trade on Thursday, Brian?
Yeah, it's an interesting day when you get a real slam down in the dollar like today. You don't really expect commodities to kind of ride with it. But the bigger overriding picture is just that there's a nervousness out there, unknown. Let's put it unknown. Nervousness that tells me that people are nervous. They aren't necessarily nervous. They're just not wanting to jump in front of a falling market at this point, or if they've got overextended positions, they probably want to move out. And I'm talking like stock index. So, we've talked all year long about the supply of cattle tightening, confirmed on cattle inventory and cattle and feed reports, and demand coming in. But we've said also that demand probably comes from a part of society that can afford beef continuously. I got to think, when it doesn't matter if you're 80 years old or 38 years old, if you're an investor and you see your portfolio kind of beat up pretty hard here, you got to pause a little bit. And I think people will. I think that's what's getting into the meat market, got into the cattle market today. But I don't want to, one day is really tough to. This cattle market has been pretty resilient. We get a tough day down and it roars right back in a day or two. So we'll have to see if it follows through. But I got to think just the value of the cutouts, the way they jumped higher last time, again, indicate good demand, tight supply. But at what point does demand just all of a sudden not be there? And you got to wonder if we're not getting closer to that. We talk about the grilling season. Well, you know, that's that's one of those things where often kind of wonder if that isn't a little bit more perceptive in nature than any empirical evidence that we have X amount of demand in a certain window of point. We probably do, but consumers can back away from that pretty quick as well.
All right, Brian, final thoughts from you. Anything just from a risk management perspective with all this noise going on in the markets broadly? I mean, what do folks need to keep in mind right now, Brian?
I think you keep for the grain farmer, you keep in mind time of year, right? It's April 3rd. There isn't we don't make crops in April, we don't break crops in April. So the market does have a tendency to sort of bide time here and chop along and move around. So I wouldn't get too far over my skis defensively. Now, as the days wear on here and we get a pulse in the marketplace or you get a little bit uncomfortable with it, I don't think I'm a big forward contractor of corn here. In fact, none. I'd probably present or pursue something in the option market for corns where you can leave that top side open. Remember, world stocks to use still the lowest in 13 years. So, and maybe not the best start to the planting season for some at this point. So there's that. So you utilize your options in the grain, corn, soybean markets, maybe in lieu of cash marketing at this point. And in the meats, got great value to lock in if you're concerned. It's a day down. We just had new highs in June cattle, right? So defend these high prices and use the right tool.
Brian, if folks want to reach out to you there at Total Farm Marketing for a conversation, what's the best way?
I would ask a phone call initially. There's two Brians here, so if you want to talk to me specifically, ask for Brian with a Y or Brian Doherty. So that's the easiest way, but we got great team members, and all of us can answer questions. Otherwise, Brian with a Y at totalfarmmarketing.com on an email. Or Jesse, last thing, just look us up on the website. We got a nice website there, good resources, and you can connect with us through there as well.
That website, totalfarmmarketing.com. Always a pleasure, Brian Doherty with Total Farm Marketing. Thanks for joining us. Have a great weekend. We'll talk to you next week.
Absolutely. Thank you, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.